Okay, boys, Daily Market Outlook episode 19. Let's dive straight into it. So, today is Friday the 14th. We have 3 a.m. pound news, as you can see, and then 10 a.m. USD news. Let's dive into the charts. So, starting off with the DXY on the daily time frame, as you can see, we've had a change of character right here, breaking above this high because this candle did not break below the low. So, we basically have something like this. We do have a change of character. What I'll be waiting for on the 4 hour time frame is for price to break above this high right here. So once price breaks above this high, longs will be much more high probability essentially. So we want price to break above this high, mitigate a demand zone, potentially this one, get a lower time frame market structure shift, and then continue the longs to the upside. So that is it for the DXY. Today is going to be a short one as I will not be trading. I don't believe that the conditions this week have been good. And I'm up now 2.4%. I took a loss yesterday, 0.5% loss. So I'm not going to get my profits back. I made good money in this week of trading, so I'm done, right? I don't want to expose myself to more risk. Let's go to the euro now. So euro starting off on the weekly time frame as well. As you can see, we've swept this liquidity point and now we are looking for a pullback. This is basic market structure. So we're at a high right now, right here. And what we want after a high is a pullback and then for the next high to potentially form. So it's literally basic market structure, right? And all of the basic market structure videos you have, it's like lower high, lower low, lower high, lower low. And this is the same thing, just inversed. So higher low, higher low, higher high, and then now we're at the high, expecting the higher low for potentially the next high. Very, very simple. Let's drop down to the 4 hour time frame now. On the 4 hour time frame, as you can see, we have disrespected this 4 hour bullish zone, which I had marked out previously in yesterday's daily video. You can go check. So this was a zone that I was looking to long from after the sweep of liquidity, which I thought it would have been. And now it looks like we're just trickling to the downside. So I'm expecting this low to go right here. And once that low goes, the shorts will be much higher probability. The same with the DXY for the longs. So just going to patiently wait for this low to be broken below, get a pullback, and then we can start shorting into these equal lows and the daily fair value gap. That is it for the euro. Let's go straight to the pound now. We can start off on the weekly time frame. No need to go to the monthly time frame. So on the weekly time frame, we've got the same thing. We're at a doji. We have this weekly gap that is currently open. We're at a high. We want to pull back to then potentially go for longs. Very simple. So it's not been a clear trading week whatsoever. This is another reason why I'm not going to be trading GU or EU. I have no idea what this daily candle is going to do. I can only plan for what I want to see and then react when that happens in this scenario. So just a quick tip, I've heard many great traders say this, or ICT traders like Kyle, JadeCap, etc. Basically, when the daily is not clear, why bother going down to the lower time frames? It's a sign that we don't know what's going to happen. In markets like these, so when you have this candle, then this candle, and then we've printed this candle, mitigated this fair value gap, that is a clear trading day for the next day because we've mitigated IRL, so internal range liquidity, and then we can look for the external range liquidity, right? So I'm not going to be trading this. It's not clear, not for me, goodbye. Just same thing here, we have this low right here, which I'm waiting for price to trade below this. Overall, this is the main low that I'm waiting to see price trade below. So once price trades below this low, the shorts will be much higher probability. I'm saying this low because this could just be a liquidity point, mitigate this 4 hour demand, and then we see the next push up. So I hope this video helped you. This one was a very short video. All of my other videos are more in depth, but I just don't want to waste your time as I don't see clarity within this chart. So that's it. Very simple, straight to the point. See you guys in the next one.